Good afternoon, everybody. My name is Isabel Hernandez, and we're here today to talk about the recent changes on alternative minimum tax and how does that affect your tax return that has to be filed for 2016. So we're going to take a look at what happened and what to do next. Please connect to the voice version through your telephone. And we're going to get started now. There's a disclaimer just so you know that this is not a formal advice, that if you understand that you're affected by these rules that we're going to explain today, that you should get specific advice to determine the next steps in your particular situation. And the agenda for this afternoon, we're going to have a brief introduction. We're going to look at our values as a firm. We will talk about an AMT background before starting to discuss the rules. Then we will look at what was in place before the Walmart case was resolved. We will talk about the results of the Walmart case and how did that change things. The response of Puerto Rico Treasury to that case, which are presented on Administrative Determination 1611. Then the credits that can result from these changes, and any pending items that are still left unclear. Again, just so you know, my name is Isabel Hernandez. I'm a CPA and a tax partner with Kivane Grant Thornton. I'm here today with Lina Morales, also a CPA and a tax partner at Kivane Grant Thornton. Lina will be answering your questions through email. You can write the questions in the chat that you have in your screen, and Lina will be trying to answer them all. If she cannot answer any of the questions, then we will send you the answers back by email later. And while Lina answers your questions, I'll be going over the presentation this afternoon. Here are our values as a firm. We as partners and employees of Kivane Grant Thornton and as part of the Grant Thornton International Network, we all try to live through our values. Our values are basically summarized in this CLEAR acronym, which stands for collaboration, leadership, excellence, agility, respect, and responsibility. Today we're trying to collaborate with you and provide you all the guidance that you would need before proceeding to the 2016 filings, and we also try to be responsible and give you the tools to make the right decisions. Okay, now let's start talking about alternative minimum tax. I suppose that most of you who are listening today are already familiar with the alternative minimum tax subject. In general, you know that this is a tax that is paid in lieu of the regular tax or in addition to the regular tax if the regular tax is smaller than the alternative, than the tentative minimum tax. Normally, and for many years, the alternative minimum tax has been determined by just making some adjustment to the regular taxable income. The typical adjustments in the alternative minimum tax were related to installment sales or long-term contracts or accelerated depreciation. Those were the typical adjustments that we used to see on an alternative minimum tax calculation. But then a couple of years ago, the Puerto Rico law changed this whole concept of alternative minimum tax and created a three-component calculation. The first one of those components was the traditional AMT calculation, and the second one of the components was one related to expenses or allocations from related entities. And the third component was related to purchases of tangible property from related entities. These components change substantially the way the AMT affected many companies. Because companies that had never paid AMT for many years all of a sudden were subject to this AMT, and in some instances in a very significant amount. This was all changed by the case of Walmart Puerto Rico Inc. versus Juan Zaragoza Gomez, Secretary of Treasury. The changes that resulted from this case are what we're going to discuss today, and what do we need to do about them. The reason we're here today is because some of these changes are prospective, but some are retroactive. So we need to take some action looking back at the prior year before being able to file a 2016 tax return. Prior to the Walmart case, the calculation of the tentative minimum tax, which is the one that you normally compare to the regular tax to determine your AMT tax, your tentative minimum tax, is, as I mentioned before, is divided into three components. The first one is calculated as a 30% of the alternative minimum net income. As I mentioned, the alternative minimum net income is the taxable income adjusted by the regular AMT adjustment that we were used to as depreciation and long-term contracts and so forth. The other component, which is the one related to expenses, is determined as 20% of the expenses incurred or paid to related parties or other expenses allocated from a home office to a branch in Puerto Rico when such payments were not subject to withholding in Puerto Rico. Okay, if you, for example, are a subsidiary in Puerto Rico and you pay for services provided by your parent company outside Puerto Rico, then those expenses are the ones that we're talking about. You're probably familiar with the concept of the 51% disallowance for income tax purposes of these expenses, where these are the expenses we're talking about, and not only the portion allowed as a deduction, but the entire amount of the expenses are the ones subject to this 20%. This is how AMT was calculated last year and the year before. Also, if you're a branch in Puerto Rico and you pay for services provided by your home office, you're in this same situation. 20% of the total amount of those payments are subject to this AMT component, or any allocations from a parent company or home office are subject to this 20%. And the third component of the AMT is based on the purchases of tangible property. For years starting before January 1st, 2015, this component was 2% of the purchases of tangible property from a related party. We mostly see this in purchases of inventory for resale and situations for clients that are basically into the distribution business. For taxable years commenced after that, after December 31st, 2014, there was a change from 2% to a new table that was created that went from 2.5% to 6.5% over the value of that taxable tangible property. Okay, so any purchases of inventory you make from a related party outside Puerto Rico were subject to this 2.5 to 6.5 percentage. This is what basically triggered the Walmart case. You can imagine in which side of that table does Walmart stand. So it was a significant component of the AMT in their case, and they decided to sue the Secretary of Treasury for that. So now we're going to see what happened with that case. Also, prior to the Walmart case, the law, even prior to that, the law had an exemption, provided for an exemption where you could request a waiver from that tangible property component if you could show the Secretary of Treasury that your prices were basically arm's length prices. The prices that you were paying to purchase that inventory to your parent company were arm's length. You could show that through a transfer pricing study, and they could exempt you totally of that tangible property component. Well, Act 72 had eliminated that from the code, so that option was not available anymore. What happened with the Walmart case? Well, on December 2015, Walmart filed a complaint against the Puerto Rico Treasury, seeking an injunction and against the continued enforcement of that revised AMT, and they wanted a declaration to say that that was an unlawful tax. What happened later was that in March 2016, the Puerto Rico Federal District Court resolved that both of those components of the AMT, the tangible property component and the expenses component, that they were both unconstitutional. And the court forbade Puerto Rico Treasury from levying, collecting, and enforcing those portions of the AMT. What happened later was that the U.S. Court of Appeals for the First Circuit affirmed the district court's decision. So that was the end of the expenses and tangible property components. Now, what did Treasury do about that court decision? Well, in September 2016, Puerto Rico Treasury issued Administrative Determination 1611. This basically presented to the public what Puerto Rico Treasury's interpretation of the court decision was and how to administratively deal with this decision. Basically, what it says is that for taxable years beginning after January 1st, 2016, the AMT computation will not include the tangible property and expenses component. It's basically for taxable years beginning on or after January 1st, 2016. Sorry for that. So for the year 2016, basically the alternative minimum tax will go back to what it was in the old days, which is just a percentage calculation on the alternative minimum net income. So the expenses portion is eliminated and the tangible property portion is eliminated. So it's only 30% of the alternative minimum net income. So that is how the AMT has to be calculated for the 2016 years and years commenced after January 1st, 2016. Now, what does that administrative determination bring in addition to that? Well, it also says that the taxpayers that still hadn't paid the entire estimated taxes for the year, that they were able to adjust those estimated taxes paid to not pay the portion that had any relationship with the tangible property or expenses component of the AMT. Also, it presented the option of for taxpayers who had already filed their 2015 tax return to recalculate their AMT without those two components and provide them for a credit. We will talk now about what is the result of that recalculation for 2015. Okay? Since taxpayers have the right to redetermine their AMT for 2015 based only on 30% of the alternative minimum net income, then that will result in many instances in an overpaid AMT. If this new calculation, which is only the 30% component, results in a revised AMT, which is the way they call it in the administrative determination, this revised AMT, if it is lower than the AMT that was actually paid on the 2015 tax return, then the taxpayer has a right to a credit for that difference. If there is no AMT with the new calculation, then still all of that AMT that was paid in 2015 is subject to a credit. Any amount of credit that is determined in that 2015 recalculation, it has to be determined before filing a return for 2016 in order to be able to properly reflect the credit from 2015. Now we'll talk a little bit more about what kind of credits do you get and how to request them or present them on the returns. First of all, the taxpayers have two options for this credit. Once you determine the AMT that you paid in excess for 2015, you can take such credit as an AMT credit, or you can take such credit as an overpayment on the 2015 return creditable to estimated tax for 2016. Now, how do we go about taking those credits? Well, first of all, if you choose to take the AMT credit, you don't need to file any particular form. You just need to calculate it and start taking that credit. Now, how does that work? First, once you have determined the entire amount of credit that you have a right to use, then you have to subject that credit to the annual limitations that are established in Section 1051.02, which have been in the code for the last couple of years. Basically, these limitations, what they say is that you can take only 25% of the excess of your regular tax over your tentative minimum tax for the year. So that 25% of the difference between your regular tax and your tentative minimum tax, that's the total amount of credit you can take for the year. Any additional credit is carried forward to future years until exhausted. Okay, so it is important to determine exactly what's the total amount of credit that you have and to determine approximately what amount in dollars would that 25% of the excess of regular tax over tentative minimum tax, what would that represent in your particular case to determine how to take this credit. The other option that you have instead of taking an AMT credit is to take it as a regular income tax credit. Now, if you choose to use the credit as a credit for income taxes, what is required? Well, you are required to amend your 2015 return. The 2015 return must be amended presenting the new calculation. For that, you have to complete Form 483.3. This is a new form that was issued by the Puerto Rico Treasury Department specifically to deal with these cases, with these AMT new calculations. Once you prepare that calculation, it determines the entire amount of the excess AMT that you paid. And then you have to file both forms and wait for Treasury to process the forms and give you the credit. Either way, once you have filed these forms, you can take the credit as an overpayment from the 2015 return and use it in your regular return for 2016. Form 483.3. This form can be used for in two different situations. First, it can be, as I mentioned, attached to the amended tax return for 2015 to claim the excess AMT paid as an estimated income tax credit for 2016. Or the form can also be used to attach it to an original 2015 tax return that has not been filed yet in order to avoid paying the excess AMT on expenses and tangible property. Now, the decision that needs to be made is which kind of credit do you want? Do you want an AMT credit or do you want an income tax credit? Basically, the excess AMT paid on expenses and on tangible property, it would be easier to take it as an AMT credit because there are no filings to be made. You just make the calculation, include it as an AMT credit in your tax return, which now provides for a section to include all AMT credits. But the problem is that the taxpayer would need to calculate the total credit and calculate how long it would take to use the entire credit based on the 25% limitation that I explained earlier. Okay? So once you make that analysis and decide how long would it take you to take that credit, then you can compare that to what would happen if you decide to take it as an income tax credit. Well, to take it as an income tax credit, you have to first determine the total credit available, consider the cost of preparing an amended return, preparing a Form 483.3. You have to file that in Puerto Rico Treasury, and Puerto Rico Treasury has to process that amendment and grant the credit. And you have to also calculate the time it would take to use the entire amount. It probably depends on basically your taxable income for the year, and if you can take it all in 1 year or 2 or 3, it all depends on your position in that return. Basically, we foresee that the credit might not be available immediately. According to our experience with Puerto Rico Treasury, it usually takes them some time to process amended tax returns. So if you file an amended return and use the credit in your next return, you might have some issues where the credit might not be available in Treasury's records or systems immediately. I'm sure that is something that can be worked out eventually with all your evidence of filing and all that documentation, but it's something that's probably not as easy or automatic as it would be to taking an AMT credit. But of course, as we already discussed, there are some limitations on the AMT portion, so you would have to decide on which, under which scenario do you feel that it'll take you shorter to collect, not to collect, to use that credit, because it is important to mention that the administrative determination issued by Treasury specifically states that this credit cannot be requested as a refund. It is a non-refundable credit. So either way, it cannot be requested as a refund. So it's a matter of deciding basically how would you like to go about it. If you need any help in determining how to estimate how long would it take to recover that credit in any of the two scenarios, we would be available to help, or your CPA, or if you need assistance, if you're going to calculate it yourself, we're here to help with that process. But it's definitely something that needs to be done before filing a 2016 return, because you need to show the credit either as an AMT credit or as an income tax credit on this 2016 return. So definitely, if you think it's going to take you some time, you might want to consider either an extension or doing it right away in order to be able to make the right decisions. And if you need to amend the return, then that also needs to be filed definitely before filing the 2016 return. Now, what else is still out there? Well, as we talked about the expenses paid to related entities, I mentioned earlier that famous 51% disallowance, which probably you're all aware of. Well, as a result of the Walmart case, the case doesn't specifically prohibits the secretary from making that disallowance. It only concentrates on the AMT provisions that we have talked about before. This 51% disallowance, it's a disallowance of a deduction. The court did not state any opinion on that area. And the Puerto Rico Treasury, Secretary of Treasury, on the administrative determination that was issued, they specifically clarified that the disallowance presented on Section 1033-17, which is the 51% disallowance, it is still valid. So this court decision and this administrative determination in no way has eliminated that 51% disallowance on expenses paid to related entities. So for 2016, the 51% disallowance is still valid. It has to be present on the return, but the AMT component of that of those expenses, that's the portion that's not going to be on that return, as well as the tangible property portion. So it is a better scenario than we had for 2015, but we still have a long way to go in fighting about that 51% disallowance. What has been mentioned in the Walmart case with regards to that disallowance, and also when talking about the AMT, was the subject of transfer pricing. Basically, what that 51% disallowance does is it predetermines that the expenses are excessive and they just disallow a portion of them instead of going through the whole process of analyzing under transfer pricing rules the validity or the amount of those expenses that are being allocated or charged to the Puerto Rico operation. Well, currently Puerto Rico Treasury has a draft of a transfer pricing regulation which they decided to write after the Walmart case was decided as a response to the Walmart case. But that transfer pricing regulation is still in Puerto Rico Treasury. It has not been presented to the Department of State for approval. So although we are following up to see what's going to be the future of those regulations, right now they are not valid yet. So as of now, we still have the 51% disallowance and no transfer pricing requirements yet. Just for your general knowledge, the transfer pricing regulations that are currently in draft in Puerto Rico Treasury have been drafted after the U.S. regulations in part and also in part after the OECD transfer pricing guidelines. So it's a combination of both what Treasury has on their desk right now. We will be following up on the future of those regulations. Also, another pending item is what will happen about the alternative minimum tax that was paid on years prior to 2015. Some people understand that for example, for 2014, where AMT was paid on this amount, on the expenses and the tangible properties, they say, well, if it was unlawful for 2015, then it must have been also unlawful for 2014. But that is not Puerto Rico Treasury's opinion. Apparently, they are making these changes for the tax returns after the court decision was effective. So the administrative determination issued by Treasury specifically states the procedure to request the credit on the AMT paid for 2015, but it is silent as to any AMT paid on prior years. So that is the current status from a Puerto Rico Treasury standpoint, and that is all about this subject. Well, I hope you were able to grasp a little bit of what needs to be done, which is basically analyze 2015, determine if you paid an AMT that you didn't have to pay, determine the total amount, and deciding whether you're going to take that excess AMT as an AMT credit or as an income tax credit, and then following the necessary steps to show it accordingly on your 2016 return. And if you need to amend the 2015 return, to be able to do that and file an amended return and a Form 483.3 together with that amended return on time before filing 2016. If you have any questions, I hope you have been able to write them in the chat, and I hope Lena has been able to answer them. Otherwise, you can contact Lena or myself with any questions you may have, or you can always refer to our publications. There you see, I hope you're in our newsletter mailing list. We normally publish a Cuvane mailbag with everything that's happening, everything that's new. We also have a tax calendar that has a lot of information and many publications in our website. So if you need any particular information, you can look for it in the website, or if you want to contact any of us in particular, you can also contact us. Well, I hope you enjoyed this webcast and you learned from it, so I hope to see you in a future occasion. Thank you very much, everybody, and have a good afternoon. Goodbye.